Good morning, traders. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and am I excited about today's episode, guys? We've got a lot of movers going on in the market. We've got a bunch of different fundamental aspects and a few different perspectives that we could really read gold on. And I want to tell you guys exactly what's happening because I'm sure, as you guys have noticed in the past few days, even the past week or two, gold has been giving us some pretty choppy price action. We haven't seen consistency. It hasn't found a trend. It tried moving lower a couple weeks ago when the Fed, Jerome Powell, the US Fed, said we were looking to possibly stop cutting rates for a little bit. They flipped from dovish to hawkish. Markets started to sell off. They flipped that again. Now we're back on the dovish pattern. Now you would have thought gold would see some strong momentum with that. However, we have not. So I'm going to pull up market, guys. We're going to see some fundamentals. We'll also cover some technicals too, and I'm going to give you guys the best trading setups out there today. Get ready because Market in the Morning starts right now. All right, ladies and gentlemen, let me pull up the chart. We will see what's cooking. Guys, drop a like, drop a comment. Let me know what you guys are looking at today. We're going to be looking at gold and NASDAQ to get started. We'll get started on gold, of course. That would be GC if you're trading gold futures, or it would be XAU USD if you're trading the gold US dollar Forex. Now, with market, what's cool, guys, is you could come up here and add your watch list, and you could put anything you want in there. ES, NQ, GC, I put even the dollar and the VIX in there because that also gives me a bit of an understanding of the general direction of gold or the S&P and NASDAQ and XAU USD, like we mentioned before with the Forex pair. Now, what's been going on with gold, guys? We know that when the Fed is dovish, usually gold has been moving higher. Gold hit highs as much as 60% return this year, has since pulled back. I think it's sitting about 50% right now. But why aren't we seeing momentum like we saw earlier? Well, gold rose modestly to about 42.04 per ounce following the Fed Reserve's December 9th decision to cut interest rates by 25 basis points. The rate cut. So, guys, FOMC is going to be tomorrow. That's at tomorrow the 10th at 2 p.m. Eastern. Now, at the moment, if we take a look at our Fed Watch tool, it's a 98% chance of a 25 basis point cut. Oh, actually, yeah, 25 basis point cut. There has been some talks of a possible 50 basis point cut. Now, I don't think they're going to be doing 50. I think 25 is the standard and where they'll be sitting at. But I think what's also important to listen to tomorrow is if they speak about a January cut as well. Does the Fed want to continue on this route of cutting rates and cutting rates? Or with poor jobs, are we looking to sort of pause the rate cuts and see if we could get the job market back on track? And guys, make sure you stick around because I am going to show you what's going on with the manufacturing and the services sector. Because right now, guys, our economic data that were being released for the US markets have been very inconsistent. Manufacturing has been lower, services has been higher. What's going on? Good morning, guys. I hope you guys are ready for a great day. So this is what we're really looking at on gold. Now we have gold selected up here. We want to scroll down and see the intraday bias on gold is still slightly bullish. Now, as I mentioned before, the Bank of Japan is looking to hike rates, which is bearish for gold, and the US is looking to cut rates, which is bullish for gold. So that right there is sort of that tug of war area in the market where we can't really find good buying or selling because we have the whole Japan looking to be a bit more bearish, while we have the US looking to be a bit more bullish. Now, something to take into consideration is these countries and their holdings, right, of gold. Now, I believe I was doing some research before. Now, Japan is ranked 9th globally in gold holdings with 845 metric tons, while the US is the top holder. So as much as it seems like it's more of a 50-50, Japan's more bearish, US is more bullish, we have to sort of also think of who has that stronger reserve, right? And that would be the US being the biggest reserve of gold on the planet. So what supports a bullish bias today? The Fed rate cut still priced for December despite strong data. Williams and Waller signal labor weakness justifies further cuts. So they're saying, okay, well, listen, if we're having more jobless claims, we're having more unemployment come through, we have to keep cutting rates. We have to try to make things cheaper, which sometimes does add to inflation, right? If they're forcing some type of price or an interest rate to become cheaper, that essentially adds more money into everybody's pockets because they're making something cheaper, which also does increase inflation. What does that do? Increases the look of gold. So all of these things add up and come together. It's very important to be aware of these aspects, guys. And using a tool like Market AI is perfect for it. You don't need to have a degree in economics to understand what's going on or to even read market. It's very simple the way it's broken down and explained to us. ADP private payrolls fell 32,000, labor market deteriorating. This is again helping gold move higher. People are losing jobs and the Fed rate cut. There's a lot of sort of weakness and uncertainty in the economy. When we hear a word as strong as uncertainty, that's when we know gold is our go-to. When we hear uncertainty in the economy, and when we're talking about US markets, a lot of times that also reflects more bearish on the S&P and Nasdaq. At this point, they are still a bit more bullish because of the pricing in of the Fed rate cuts. However, it's something to be aware of, guys. When we have uncertainty, that's when we can get massive sell-offs and massive pullbacks like we saw on the ES earlier this year when Trump started talking about tariffs over here in the beginning of January, February. That brought uncertainty. He said, we're going to start tariffing Canada and Mexico much harsher, 100% tariffs, 150% tariffs. Markets didn't know how the economy would react. When there's that level of uncertainty, what happens is people are scared. What happens when people are scared, guys? If you're scared and you have a lot of money in the market, you're going to sell. You're going to want to secure profits. You're going to want to get out. You're going to want to lessen risk. And that causes a panic sell. And markets sold off over 20% to the downside from all-time highs on the S&P 500 in a single year. Guys, not even a single year, but in a single span of, let's see, February to April, 2.5 months, guys, markets sold off 20%. And then since Trump announced, oh, we're going to do a relief on tariffs for everybody but China. So that was the trade relief part one. Nalab is out today, guys. The homie Nalab, the founder of Market, co-founder of Market here, he is off today. He had a great trip to the city over the weekend. So, guys, go show him some love too. Follow him on social media. Drop some likes and some hearts and some shares. So what did we have since he announced the tariff relief? So think of it this way, guys. We had the uncertainty, which drove us lower. Relief of that uncertainty, say, oh, never, almost like a never mind situation, which we've even seen that more recently happening as well. Never mind situation to this massive move. What's that going to do? Well, he also tweeted that day, and I'm talking about, of course, President Trump tweeted that day. Now is a great time to buy. And what happened since then? Markets are up to all-time highs and up over 30 to 35%. And again, this is just the S&P 500. If we were looking at something like the Nasdaq, that would have even a stronger percentage. Now, back to gold, guys, because I know a lot of you are trading gold, whether, again, like I said before, XAU or XAU USD or GC. It's going to be very similar price action. And something to point out right away is going to be a few of these key levels that I have marked out. So the first thing I want to mention is when in doubt, zoom out. If you're too zoomed in on the chart and all you see is something like this, this is chop, this is a mess. There is no consistency here. We see that we could break previous day high, close green, but then reverse. We see that we didn't even break previous day low, we stayed in a range. This day we broke previous day low. This Thursday we broke Wednesday's low, but then we reversed and closed green. The following day, Friday, took out Thursday's high, but then it reversed back and pulled back too. So there has been zero follow through on gold right now. And as traders, it's not just our job to enter a trade and make money. It's our job to understand market dynamics and market structure. And using a tool like Market, like I mentioned before, it gives us that insight and clarity so that we're not sort of second guessing or we're not jumping on Google and looking everything up or watching Bloomberg or CNBC or whatever it is. Everything's very clean, laid out right here for us. Guys, you could save 10% on Market. Use discount code KEV if you're interested. They've got another great area over here on the homepage, general markets. This gives us a bit of an idea of the general markets right now. So markets show selective risk taking with gains. So that would be more risk on. So we have Fed rate cut, markets price in a likely 25 BPS Fed rate cut tomorrow, supporting risk assets and encouraging selective buying and growth in cyclical sectors. Strong corporate earnings, as we've been seeing, guys, the Nvidias of the world, the Amazons, the Apples, Microsofts, Googles, killing it on earnings, double beats, earnings per share, revenue, all double beats, doing well and projecting to do even stronger going forward. My opinion, there is no AI bubble. I want to know what your guys' thoughts are in the comments. If you're here on X, if you're here on YouTube, let me know in the comments. Are we in an AI bubble right now? I'm going to go with no. I think AI is just getting started. Me and G were talking about this the last session of Market in the Morning, and we mentioned that there really isn't, we're really just grazing the surface right now of what AI has to offer, right? And we're just hitting chat rooms, chat bots. It hasn't even really fully made its way into pharmaceutical, fully made its way into even automated delivery, right? How come Amazon factories, not that I'm saying I want everybody out of a job, but to have some type of AI system, programming, robot, they even have the drones. There's so many different aspects and angles that AI could start to take over that it is, to say it's in a bubble would mean we've sort of hit its peak. Not even close. Taking a look at our Trump schedule today, guys. This is our Trump tracker here on market. It is at a 35 score, so I wouldn't be too concerned about, oh, keep an eye, Trump might say something. So let's see. It consists of routine pool calls, a closed press reception, and a pre-credentialed economic speech at a casino resort. Hopefully they don't go bankrupt. But while the economy remarks could draw some market attention, the lack of major policy announcements or live public access limits immediate public or market volatility potential. Right there, guys. That's what I needed to know. Now I know, okay, Trump isn't that a big risk right now, right? That's great. Now I know one thing I don't really have to keep in the back of my mind. This could be on the side. And what's cool too, guys, is the market news gives you a nice quick brief of whatever else is going on. So we have AutoZone earnings fall short. Toll Bros reports Q4 earnings miss. Fed Reserve meeting sparks market anticipation of Fed rate cut. White House approves NVIDIA exports. This is huge right here, guys. So the White House yesterday approved of NVIDIA to start exporting their chips to China again. This is going to open up 30% of more revenue for them. This is going to be massive, I would think, for NVIDIA. So again, something to keep an eye on. Is this news, is this enough to help prompt the market and give more optimism to the AI sector, to NVIDIA, and then, of course, to the market in total? Hola, ¿cómo estás? No hablo español. That's all I know. I apologize. Somebody in the comments asking about Spanish. You can use, what's cool with the live news tab over here, guys, is you can change the language on the live news tab, and that's pretty cool. Right now, we are currently the only platform that has that capability. Look at that. How cool is that? Any language. Almost any language. All right, guys. So that's sort of gold's angle today. I'd like to hear your guys' thoughts on gold. We can break it down. Let's break it down to a bit of a lower time frame, because something I want to keep an eye on really today is going to be the range, right? And that's what we've been seeing on gold for weeks now, right? Look at this chop. Chop, chop, chop. No continuation. We've maybe got some strong selling coming in now and then. Other than that, nothing major. So something I'm going to be keeping an eye on is going to be this major level right up here. So this is around 42.79. What I like to do, guys, when I'm done with my fundamental analysis, like we're going over market, then I want to go over my technicals, these things have to line up. So what I might also do is I might look at my market level for GC and see where my bullish target is and say, okay, 42.50, 42.50, that's coming up right near my area of interest right here, 42.50. Perfect. This is the red zone I'm looking at. This was a resistance point once, twice, almost 3 times. And then once we broke it again, look at price retraced and held. So this is what I would consider an AOI. It's an area of interest. So I trade supply and demand as a strategy. That gives me my system, gives me some foundation, and gives me an idea of where markets are currently ranging and trading at. I actually see right here a 1-hour supply, and that one worked very well up here. So I do like that top of the range around 42.79 as well. So now what we're doing, guys, is we're coming up with some key levels, and then we'll come up with some trade setups as well to see, hey, what trade setups can I look for off of the fundamental analysis that we just broke down. So on gold, because we're looking slightly bullish with more of a bullish target, I might look for the pullback level 42.15. And let's check our 42.15. And that's going to be right down over here, 42.15, right inside my area of support. Guys, what do we recognize with this big green zone? That the market has respected it so many times. We had respect. It held once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times again overnight. So this area between 4,200 and 4,220, major support on gold. I want to see if buyers could step in that area right there. And again, what we'll be doing is we'll be trading the range. We'll be buying the lows and looking to sell at the high. So that's a possible trade setup we want to look for on gold today. 42.20 area off of that demand zone. Then I would target that market level around 42.50. So very easy, very simple trade setup. And again, I'm looking to be bullish because of the US's stance and how we're a bit more slightly bullish on our fundamental aspect. What's up, George is asking in the comments, do you think that we pump before FOMC dumps us? You know, quite possibly the other way around. Let's take a look at the S&P and NASDAQ right now. So the S&P, we got to remember, it has been feeling a bit more bearish since about late October. But at this point, we have had a pretty strong move back towards those all-time highs. At this point on the S&P, we're less than 2% away from all-time highs. And tomorrow being FOMC, that can very well pump us that 1.4% very quickly. So what I would think is they might try to dump us today a little bit so that they could try to get a better price for when FOMC does start to pump us. So like, let's say this is a daily fair value gap right here, which would be like a volume imbalance. If we put our volume profile up here, I'm sure, yep, look at that. Very low volume shelf over there. So I would like to see price try to pull back. And something else to mention, guys, off of this area. So always look at, when you're looking at a chart, don't just look at the candles. We want to look at the price levels and the scales, right? So this price level right here is what I'm looking at. Now, I also see there's a low volume shelf sitting a little bit higher too, but I also see one other thing, and that's going to be all of these little pivots. Look at this. Now, what I call these are low-hanging fruit. And the reason for that is because anybody who was trying to chase longs on this way higher, they're putting their stop losses at that previous day low. So I'm reading this on the chart as, listen, these are stop orders right here. People are stopping out of their positions over here. And institutions, we know that retail only makes up 5 to less than 5% of actual market volume. However, we also know that going through experience-wise, people know that, listen, markets will stop you out before they reverse in your favor. Well, if that's the case, let's try to get into that better mindset of where are their stop losses instead of where should I put my stop loss, right? If I was long, where would my stop loss be? And then remember, this is the daily time frame, so we could break it down 4 hour, 2 hour. Something I will mention yesterday is yesterday we started to break demand. So yesterday we had a 30-minute demand right here, right there. And what was nice about this one was it was a demand zone right below a previous day low. So I ended up taking longs on this right off of there, and I stopped out in a little bit. But in all reality, it was definitely a bit more towards an A+ setup. I'm just going to show you what it looked like at that time. At that time, it looked like, hey, we just swept previous day low. We came into a demand zone. We're starting to hold. We've been making higher highs. We've been making higher lows. I'm going to go long. Again, like I said, it stopped me out. So that tells me, listen, if my analysis is wrong on this trade, it's going to stop me out. So my analysis was wrong, which means we're no longer long. We're no longer bullish. Bears are starting to take control. We did not break above this daily supply zone. We see that daily supply zone here on the daily, where we have this big point where we rejected multiple times. So I do want to be a little extra hesitant, and I might even look for us to move lower off of this zone today. And just like George mentioned and asked in the chat, I'd be looking for us to move lower going into FOMC, so we could look for a bullish reaction to FOMC. So a few different angles on this, guys. This is the ES S&P 500. Let's take a look at the ES on market today and see really what's going on and what could be influencing it and what might actually help support my short-term bearish buys, because I am still more bullish on the market overall. We are near FOMC. We're near that 25 BPS again. Things are more optimistic in the market. But because of the jolts and CPI coming up, we have different news and different economic data. So let's take a look real quick. I do want to show you guys, let's cover what could be holding and what could be going against this bias. So December rate cut, 87% chance despite jobless claims beat. Core PC inflation fell to 2.8% year over year, supports dovish Fed narrative. So if inflation's staying at ease, they're able to cut rates. If inflation is moving higher, that's when they're not too sure if they should cut rates. So back when they shut the government down, we weren't getting a lot of these reports. In my opinion, that government shutdown, I know a lot of people were saying, oh, it was the Democrats, could have been sort of more of a Republican stance so that they didn't have to release any of these economic reports. They could sort of leave the Fed blind so they could continue to cut rates. Now they're not releasing any of the October data. Again, sort of a push-pull there, right? Was there something more behind that government shutdown than what they really led on? Originally, it was for healthcare. Now, after the government shutdown ended, apparently Trump's going to sign a 2-year extension to the original healthcare that they were planning on canceling, excuse me. So it was almost like they did it for nothing, right? But I don't think they did it for nothing. I think they had an angle on it for the reports and the data. Retail investors absentee risking U.S. equity positions since October. S&P rejected 6870 twice this week. Weekly channel ceiling sitting at 6900. So again, we are finding some resistance in this area up here, the 6900 area. So because we rejected it once on Thursday, twice Friday, again once market opened up on Monday, here we are on Tuesday. Where is price? Where are we going to be headed? And can we find a short position inside supply? Now, at this point, what I would want to look for, technical-wise, is if we could hold some of these lower highs we're creating. So before we were making higher highs, higher high, higher high, higher high. Now, at this point, I want to make sure we're creating some lower highs, and lower highs. If we could create those lower highs, I'm going to take it short. And what I'm going to be looking for, too, is guess what? We also started to now make a lower low. We broke that demand zone. Well, if we're making lower lows and we're making lower highs, that shifts us a bit more towards a bear trend. And if that's the case, I want to be prepared and be trading on the right side of that. Guys, smash that like button if you're here right now. Do appreciate it. Join me for Market in the Morning, Tuesdays and Thursdays. Normally these Tuesdays, guys, we do have Nalab, one of the co-founders of MRKT AI, here for the show. He was not here today. Definitely drop a like for him, show him some love. But join me this Thursday. We will have Jeev back on as well. Those shows are always awesome. Always have a great conversation as well. Same with Nalab, man. Great aspects, great analysis and perspective on the market. They both break it down fantastic in their own different ways, and yet we always come back to the same conclusions. And that's where market AI is such a strong catalyst and such a strong tool that you don't need to, like I mentioned earlier, you don't need a degree. You don't need to go to school extra. You don't need to study finance online. If you're a day trader, trading futures, Forex, stocks, Market AI will be your go-to. This will give you your fundamental breakdown. It'll tell you what's driving that stock, what's driving that ticker, everything else. Let's say we could even have an equity dashboard over here, and that does have a bit of a trending stock area. So Tesla is among the top US volume leaders and is showing notable pre-market gains, putting it on traders' radar for outsized intraday volatility. So, okay, Tesla's the first one, Nvidia's the second. We could take a look at that. Yo, Netflix, man. I like Netflix below $100. Especially after that possible HBO deal, the Warner Bros. But after Paramount put their bid in, that's pretty big too. Let's take a look at Tesla real quick. Just see where it's trading at. Beautiful. Look at this, guys. Tesla, again, for any stock traders, market is also a great tool. It told me Tesla's on the radar. It's got volume picking up. Listen, it's got volume picking up, and it's coming near a support zone. I know a lot of people are going to be selling at lows. That's where I want to go long. Plus, we have a demand zone right here, too. So I have a lot of support right below us with volume picking up. This could potentially be an A-plus entry. And this would even be a swing trade, right? If we wanted to buy some Tesla around 430, possibly look to get out near the high of the range around 460. That's a $30 move. And if you're trading options, that could be huge for your delta on those contracts. So really great tools, really great breakdown. Let's see. Look at this. Nike is moving sharply in pre-market trading, rebounding more than 4% after being one of the prior session's notable S&P 500 decliners, drawing attention to a potential short covering and sentiment shift. These are things that unless I'm going through all these big news outlets, I'm watching CNBC with the background, I got all these monitors up, you don't need all of that. Market has everything. And then some. Market has everything and then some, and they're just keep adding and adding, guys. So let's take a quick look at our economic calendar. Let's check this week. As we mentioned, Fed rate decision, FOMC, is going to be at 2 o'clock today. Very important. Definitely want to keep an eye on that. Very, very important. Guys, if you have any questions, please drop them in the chat. Make sure you hit that like and subscribe. We found some great levels and some great technicals and fundamentals across the S&P and gold today. If you want, we can cover NASDAQ very quickly as well. Take a look at NQ. Now, NASDAQ, I'd want to see if we could find support off of the NVIDIA. So let's take a quick look at NVIDIA too, because if I'm looking at the NASDAQ, I want to make sure I'm watching where US equities, the large cap equities that NASDAQ holds, are also moving in my favor. So I see right here, this is NVIDIA. It is struggling, but it is slowly trying to make its way back higher. See all these yellow levels? It might look a bit like a mess, but these are just key psychological levels, right? And what key psychological levels are is their price levels every $5 to $10 to $25 increment. Now, it depends on where we're trading and what that ATR is. On NVIDIA, I have it 200, 195, 190, 185. So I have it every $5. And the reason these are key psychological levels is because at some point when we were trading into these areas, we didn't have any historical data up here because they were all-time highs. Whenever we come to all-time highs, we don't have any historical levels to work off of. When that's the case, we want to add key psychological levels. They're key psychological levels because we're not the only ones watching them. These are things that even institutions and even possible algos are going to be watching because they have that whole number, that 0 ending, that 5 ending. So very important there, guys. So NVIDIA looks like it's trying its best to break out higher. I see previous day high right here on NVIDIA. I'm going to mark that out. I'm going to add an alert. Does the daily gap that we came so close to matters? It depends. What are you looking at? The gap on NASDAQ? Let's see, NQ. No, I don't really see any daily. The gap down here? No, you said close to. Definitely let me know. Was it a New York session gap? There are a few different gaps, guys, when it comes to trading. There's a fair value gap, and then there's, of course, the New York session gap fill, which would be New York session close to New York session open. Let's see. So yesterday's New York close on NASDAQ right here, 330 closed right there. So this would be our gap fill. So if we were looking for us to trade higher, that would be our gap fill price target. Same thing I'd look for on NASDAQ, sort of similar to gold, in that I'm looking for this demand zone down here to hold. Now, I do want to note we are trying to take out some lows. Yesterday, we sold off very strong, and we took out that previous day low. Today, we're already very close to that previous day low. So I might look to see in the morning, do we want to pull back first and find some selling pressure? Because what I would like to do is use this green area right here that was an old resistance old resistance, new support, new resistance as continued resistance, right? We look for similarities and we look for repeatability in the market. On NASDAQ, we could take a quick look at the market terminal as well as our market research knowledge terminal. Such a cool name. So it's still markets pricing in that 89% probability of a 25 BP Fed cut Wednesday, supported by soft PCE and cooling labor data. However, Bank of Japan December rate hike now likely, creating tightening divergence that drains yen carry liquidity. Traders cautious, positioning for FOMC guidance rather than committing fresh capital. Intraday consolidation expected around 25,600, 25,700. So what I just mentioned before, guys, about key psychological levels, right? These are now whole numbers: 25,600, 25,700, 25,750. These are levels we want to keep an eye on the NASDAQ, because NASDAQ isn't trading around $100, $200 like NVIDIA. It's trading around $25,000. So we're not going to look for $5 increments on NQ. That would be silly. Look for 100 points, 50 points, 25 points. Guys, before we wrap up the show, and I definitely appreciate you all for joining in today, make sure you like and subscribe, man. We do these shows every Tuesday and Thursday to keep you guys up to date on what's moving markets with Market in the Morning and Market AI. Let's see. So India Civil Aviation Minister on X orders 10% Switzerland on airline. Nothing major there. Switzerland says U.S. tariff reduction statement published an error. Okay, so Swiss tariff relief. Guys, this was a pretty big mover from a few weeks ago, where the U.S. announced that they were relieving some of the tariffs on Switzerland from 39% to 15%, right? So that's a pretty big decline. So if that's not really following through, can that also now have a negative impact? Because before, when we take tariffs away, as we mentioned, when we take tariffs away, that adds some more certainty, adds some more breathing room. When we add tariffs, it adds uncertainty. So this adds more uncertainty again. That could lead to a bit more of a bearish reaction. Guys, hit that like and subscribe. Like I said, we're going to be wrapping up the Market in the Morning right there. That's our NASDAQ, S&P, and gold analysis of the day. Technicals, fundamentals, and everything in between market and trade setups. I hope you guys have a great rest of your day, and I will see you all on Thursday. Take care, everybody. Follow on social media, and I'll see you guys later.